Welcome to CEO Insights. I'm Marilyn de Guzman with investingnews.com. I'm speaking with Koby Kushner, incoming CEO of Athena Gold, a junior exploration company with projects in Ontario and Nevada. Welcome, Koby.
Yeah, thanks for having me.
So let's get down to it. We've seen a noticeable shift in investment focus from major gold mining companies towards Canada and the US. What factors do you think are driving this trend, and how does that impact the broader exploration landscape?
Yeah, sure. Well, geopolitical tensions are certainly one of them. Some jurisdictions are perceived as more risky than others, with places like Canada and Nevada perceived as less risky. What we saw happen to Barrick Gold and Mali is a great example of companies wanting to get to safer mining jurisdictions. We also saw in the last couple of years Kinross exit Russia completely. So there's also growing resource nationalism now, especially with critical metals. And I know gold's been traditionally regarded as a critical metal, but governments are starting to treat it as such. And it's become more obvious as of late with New Zealand actually just put gold on its critical metal list. So, given that most major gold companies are North American based, so it's no surprise that they're now doubling down on projects that are closer to home. I think the other thing that's driving companies here is it's simply the geological potential here. So new discoveries continue to be made in our backyard. The Great Bear discovery in Red Lake, Ontario led to Kinross buying out Great Bear for almost $2 billion. And then in Nevada, there's still some significant discoveries being made. What I find particularly interesting is Anglo Gold Silicon discovery in Nevada's Walker Lane district. Because Anglo's actually out of South Africa. They're not based out of North America. So they're a foreign major gold producer. They've already defined 17 million ounces, almost 17 million ounces in Nevada. So you asked how this will impact the broader gold landscape. And I think what it means is that we'll see a lot more future production coming from North America and probably more M&A in our neck of the woods.
So, given this shift, how is Athena Gold capitalizing on the increasing interest in North American gold assets?
Well, the Great Bear and the Silicon discoveries that I just mentioned happen to be right where we operate. And it's always nice when your next door neighbors are investing heavily into their projects. So our newly acquired Laird Lake project, it's in the Red Lake Gold Camp. And it seems that every few years this camp is blessed with a new $1 billion discovery. So the famous Red Lake high grade zone made Goldcorp into a major gold producer. The Gold Eagle discovery, led to a $1.5 billion acquisition by Goldcorp. And more recently, Great Bear was taken out for almost $2 billion by Kinross just a couple of years ago. So Kinross actually just put out the PEA for the Great Bear deposit last fall, and the economics indicate that this is going to be a world-class mine by all measures. With production 500,000 ounces a year over the first 8 years, all in sustaining costs in the top quartile at $800 US per ounce. So, and it's a stone's throw away from our Laird Lake project, and it's also contiguous to us, of course, is Evolution Mining, which now runs the famous Red Lake gold mine. And then we also have West Red Lake now putting Matson back into production this year. That's 10 kilometers from us. So something similar could be said about Excelsior Springs in Nevada, which is our Nevada project. So Kinross is very active in the Walker Lane district. They're our nearest neighbor there. And just further south is Anglo's Silicon project, which I spoke about. So Anglo Gold is investing heavily in the Walker Lane trend. So last year, to give you some color there, they put more than 40% of their global exploration spend into this project. And this is a jurisdiction, a country where they don't currently produce a single ounce of gold. So, what's that tell you? So, both projects that we operate are in areas that are very well heated. So we should benefit from several neighboring mine operators investing in the area, bringing in qualified people and infrastructure. And then with several different mine operators all around us, it's not inconceivable that a discovery at our projects could garner major interest.
Certainly a lot of activities currently, but do you see this trend as a long-term shift, or is it more of a reaction to current market conditions or geopolitical factors?
Yeah, it depends how you look at it. I think no matter what, the consequence is long term, whether or not the decision right now is short term. So the political landscape's always changing. Country risk is always changing. Both Canada and Nevada have stood the test of time. And I think a lot of majors were burnt in prior cycles by investing in, call it non-tier one, tier two, tier three jurisdictions. So I think majors have become a lot more risk averse than they have been historically. So I'd expect tier one jurisdictions to continue to take priority for the remainder of this current gold run. And then, to my point before about the consequence being long term. So mining is a long term game, right? It usually takes over a decade to go from discovery to actual production. So it's a lot different from a junior investing in exploration versus a major investing in exploration, because majors don't invest for a quick sale to another major, right? Their investment in exploration really only pays off once the asset starts to cash flow. So when majors are investing in exploration for their non-producing projects, they're investing with a long-term, multi-decade view in mind.
So maybe this is a good time to talk about your projects. As I mentioned earlier, you have projects in Ontario and Nevada. Could you provide an update on these projects and maybe some of the upcoming catalysts that investors should look out for?
Yeah, sure. So at our Laird Lake project in the Red Lake district, we recently announced grab samples from our maiden prospecting program. So we sampled, the highest grade grab sample returned 373 grams per ton gold. So that came right from the surface outcrop. These are actually some of the highest grade grab samples from surface ever publicly reported in the Red Lake Gold Camp. And that's significant because Red Lake has produced over 30 million ounces of gold. And the Laird Lake part, none of those ounces came from Laird Lake. Laird Lake is a very underexplored part of this camp. So as soon as snow melts, we'll be back out there. We'll be doing property-wide till survey. That's the current plan. Geophysics, the LiDAR is already done, so the only thing remaining before we finalize our drill plans will be the till geochem results. And then moving down south, we also recently completed a prospecting program at Excelsior Springs. We've put out some of the results. We put out the initial results, and those initial results came from an undrilled target. But we sampled 6.6 kilograms, over 6.6 kilograms per ton silver on this target. So again, this target's never been drilled, and it's a ways away from where most of the historic drilling at this project has taken place. So, at the Buster and the Western Slope trend, where we have drill results of 4 grams over, 4 grams gold over almost 52 meters. So the discovery has already been made on this project. We believe that there's more. The real upside comes from the blue sky targets. So we have additional results from this program that we'll be releasing to the market in the coming weeks. And we're excited for that. So stay tuned.
Right. We'll leave it at that. Thanks again, Koby, for taking the time and sharing your insight with me today.
Thank you. Cheers.
And thanks everyone for watching. Join us again next time for another edition of CEO Insights.